Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have back with us Merrit Strunk, who's the founder of Momentum Financial Insurance Services, and we'll be talking about their proprietary Momentum LifeYield Process. Merrit, welcome back to the program.
Hey, thanks, Mike. I'm so glad to be back with you again, and thanks for having me on the show.
You're welcome. I always love when people pick a, kind of like their proprietary process and their, unique thing, because I always love when people have years and decades of experience and you take a piece of this and a piece of that and you fine tune it and you put it in the pressure cooker and it comes out with, this diamond that all of a sudden people wouldn't have known to put it together until here is this LifeYield process. So I'm excited to learn about it. I guess let's start with what is a LifeYield process? Let's define what that is and then dive into what it does for your clients.
Sure, Mike. Thank you. Hey, so, when you're talking about financial planning process, it's a lot about making sure you end up in a place you want to be. And the key factor is predictability, right? So we've developed and refined over the years a process that will help us in the predictability of having success in retirement. So let me just ask you this question here to try to give it a seating in your mind, kind of a parallel sort of example here. So imagine, Mike, you and your family are going to take a trip, the old cross the road trip, get in the car, kids, let's go. So, and let's say you're taking that vacation trip and you're going to drive, and maybe let's say you're going to go camping or something else, right? So what do you have to do? Well, you have to know where you're going, right? Yeah. You have to have a target in mind. Then ask yourself, well, Mike, you're going to have to figure out how long it'll take to get there. How many days driving? Is it a short one? Is it a long one? Are there many days? You're going to go see the Grand Canyon. How many days will it take to get there? Are you going to need to stop along the way? Are there some stops that you want to see? Are there some places you want to see? Mike, are you and the family going to need passports? Are you crossing over to Canada? Those are the things you have to ask, and so you'll also have to say, what are the things you want to do when you get there? Right. And for how long will these things last that you want to do? How much will it cost?
How about this? Our budget is X and gas prices are Y. So we need to make sure of the stops and the attractions and the souvenirs and spending and food because we need to stay within our budget. So you're describing beginning with the end in mind and making sure that you're going to be right on track.
Right. And it's exactly spot on. What's the cost? Where will you get the money? How much money do you need to have to start with? What's the accessibility of these funds? How about these little things? I know it's kind of crazy, but how about airing up the tires?
Right.
The preparing, the air up the spare tire. You never think about that until you have to change the tire, and then the spare tire doesn't have any air.
And that's an aspect of protecting your family.
Exactly.
So it's like, air, whatever. No. It's going to protect your family, air, because it's going to keep, your car solidly on the road. Also, with the properly inflated tires, you're going to have the best gas mileage. So there's all these things that go into saving some money and protecting your family. And that's an interesting correlation with financial services because we need to save, invest, protect our families.
Mm-hmm. How about emergency supplies?
Yeah.
First aid. Or checking your oil level, your coolant level, maps, directions, snacks, drinks, water. So the idea is that, if you skip some of these steps, Mike, for you and your family, in preparing for the trip, will you be in store for some surprises?
Of course, because you've skipped over many steps thinking you're going to, let's just go. But in reality, you're probably going to delay things because, we had a flat tire. We didn't have the spare aired up. Now we got to wait for whatever.
And even if you did your preparation, there are still going to be some surprises that perhaps you couldn't plan for. So when you consider the importance of lifetime financial journey, you can see why the financial planning process that is solid and been refined and has a predictability of success is paramount in its importance. So this just helps having the roadmap of the steps to take and the things to do to help that predictability of successful outcomes. So it lays out how things are done. It provides us focus when we meet with the client for better outcomes, and determines how those steps should be and in what process they should be, right? So to this point, when you talk about, we call our proprietary process the Momentum LifeYield Process. So like I say, we've developed this over time, refined it over time. And it's for those people who, this is a great point, which is those individuals who aspire for catch this term, a work optional lifestyle in retirement.
I like that a lot.
Yeah.
That's what people want is flexibility, work optional. You might not want to totally retire and play golf the rest of your life. You might want to, work here and there, but work optional.
Exactly. What if I like doing what I'm doing? Or what if I have that kind of, skill base that lets me do a little bit here? I could turn off and on the income, but, I got to do something in retirement, right? So for those who aspire to either have those choices, and that's why I say wealth allows you choices, quality, things like that. When you don't have enough money for your lifetime, guess what you give up on? You're getting compromises. And you may have to compromise in your quality or the number of choices that you have. So now, if we do this ultimately, do this process correctly, it really contributes to that level of success that we can get to. So, it addresses all these potential gotchas. I like to say that in financial planning, our job is to build a moat. Remember the old days where you have this castle and it's built in someplace, and then they build this moat of water around it to defend. So get that picture in your mind. So here's my financial success as the castle. I build a moat around it, and as these things happen, trying to get past my moat will be defended against that. So things like, if we did our LifeYield process, ultimately we defended against these things. Say like the economy crashes, then we're going to be okay because we've accounted for that. If the stock market crashes, the stock market goes down, what can we expect? And we'll be okay.
Well, you used an interesting word of if, and it's not like a full on crash, but I would say when the stock market makes, volatile moves, because it always does, up, down, all around. So you can't just look at, over the last 30 years, this stock or this sector went from this to that, but that might be the case, but there are a lot of volatility in between. So plan for that.
Absolutely. And that's what we do through the process. And, so that's the market crash, the economy. Then what else? What if somebody gets sick? Are we going to be okay as a family? What if one of the spouses predeceases each other? Will the survivor be okay? What if we live a long life and we need help later on? Will we be okay? And so it's building the moat around your financial life so that you will be okay. So the steps in the process, you might be wondering, well, how, what's going on in this proprietary process? You could do that. Well, the first time we meet with a client, they obviously have questions in their head about their own situation. And their situation could be different than anybody else's. And so we unpack that. And in a very visual way, we're all somewhat visual. It helps to see something that, as esoteric as bits and pieces of your financial life all coming together visually, it is such an effect that it has on clients when they see that whole cloth. There it is, all in front of you visually. So we bring the gift of clarity in our first step, which is our discovery phase. So there's a gift there. The gift is clarity. And you can start seeing the tension come out of people's neck and just knowing what the reality of it is. And we state goals. What are you trying to achieve? What are your concerns? Where do you see yourself going? Are there any issues that we need to talk about? These are things like the normal one, which is retirement, or enough income for the rest of our lives. That's right in there. Education, maybe for kids, so there might be younger couples, or goal-oriented. I want to buy a house. I want to travel. How about legacy? Passing along wealth to the next generation and doing that tax efficiently. Charitable giving. There's a lot of people out there want to just say, I want to do the best for my family, but I also want to contribute to important causes that are, we care about. Or just efficiency. They want to know they're doing things the right way and as best as they can. So in order to do that, we go through this discovery phase and then we unpack it. And then the first stop along the way, I know it sounds crazy. You think about your typical financial advisor and they go, well, numbers, money, dollar signs, or whatever. We talk about your family situation, your estate planning status. What are those critical legal documents you have to have? And are they in place? Can we check some boxes here? And then we go into, well, what's your current situation? How do we take a look at that? We use third-party analysis. We tear it apart. We point out anything you need to know. What are those fees you've been paying? What are the rates of return? It's always so surprising in that stage because for a lot of people, many times they don't understand what they're in. They don't understand why they've invested in these things. They think they do. They've got this stock or this mutual fund or this ETF or maybe this REIT, and they kind of lost view of why they have these things. So it's that analogy that I've used before. It's a cluttered closet. Over time, they've acquired things. They may not realize that they're 100% risk or more in certain aspects of their investments, or there's high risk and low reward. They'd ask themselves, scratch their head and go, why on earth would I want something that's high risk and low reward? Talk about their family situation. And after we do that, and then we look at income, expense levels, add inflation in there, whether they have certain protections in place, their current risk exposure, their risk score. And then we do a projection that if you did nothing at all, Mike, where would you end up? Then that becomes the basis now for any future decision making. Now I know with clarity where we are.
Yeah.
What's the better plan? How do I go about that? So right there, that gift of clarity comes in.
It reminds me of when you hear, the life coaches out there say, hey, we can help you have a crystal clear vision of your life, personally, professionally, spiritually, financially, and physically, and all of these areas. And it's like this big exhale, like, oh my word, I just went through this 3-day program. I've got every single goal and the why behind them. I know exactly where I'm heading. Yes. Well, in that financial pillar, like you're describing, having all of that clarity, where I am now, where I want to be, and what it's going to take to get there. Now it's just kind of like a formula to go, okay, put one foot in front of the other.
Right. And thank you for bringing up the why, because you have to know why you're doing what you're doing, because in times of crisis, say if that stock market does go down, people tend to generalize the fear in the market to everything. And then you say, well, let's get back to the why and why we have the plan in place we do. And that sets them right back on target, right back on the path. After we go through our discovery session where we've provided all this clarity and we've got the big ahas of what we need to know and we've set the goals in place, now we say, all right, is there an opportunity for that better plan or that better procedure? Eliminating unnecessary risk is one of those. What's unnecessary risk? Risk, you can still achieve your goals without taking that risk. We see that in a lot of people. So then we go into the planning phase. That's phase number 2 in our proprietary process. So these are answering questions like, how are we going to fund those goals and those things that you would like to do in your lifetime? Is that buying a house? How are we going to do that? Is that taking 6 vacation trips in the first 6 years or 10 years? You're going to take a vacation every day, every year, or maybe 3 smaller ones. How are we going to fund that? What kind of money? We're believers in that every bucket of money needs to have a purpose. Mm-hmm. And what people find themselves is, I've got X number of dollars sitting in a savings account and I don't know why. I'm not earning anything on it, right? You have to have a purpose for the money. And I think that's something that we're going to talk about in a future interview. But in this planning phase, it is to know how your goals will be funded over time. It is to address the issues. Let me just talk about some of these. And I don't know if any of our listeners have heard these before in this certain way, and they kind of intuitively know this, but the risks in your life, in your financial journey, tend to go along these lines. The first one, and people are most concerned about, is outliving your money.
Yep.
And the equal sign to this is longevity. Right. So outliving,
because we're living healthier lifestyles. We're living longer than we did back 20, 30 years ago.
And even if your lifestyle is not so healthy, medical care has advanced to where they'll just preserve your shelf life, longer than you thought. Then change and this one, the second one comes under changes in the market or market risk. We talked about that. So market risk, that if you had money and you don't know what your risk tolerance is, and you're so overexposed and something in the market happens, that's a risk. Because now in 2008, you heard people in the Great Recession, you heard people say, oh my gosh, I may have to work forever. It's because they didn't know what a risk exposure there was. There wasn't any plan behind the money they were doing. They were just doing their journey on accumulation, but they weren't operating underneath a strategic plan, knowing what the risk tolerance was. The third one would be inflation impact. Inflation is probably one of the most damaging things to the longevity of your assets over your lifetime. Why? Because your dollar just buys less for all the expenses you have to support your life. And so you'll use up your dollars a lot faster. Everything increases. A brand new car in 1975 was, $3,100. Now, inflation, look at us now. I mean, that's $40,000 or $50,000, depending on, what you're shooting for. So number 4, in terms of a risk that you have to address in your planning in our second phase here, is rising medical expenses over your lifetime. A healthy 65-year-old couple can plan on spending, multiple 6 figures over their lifetime just for the healthcare that Medicare doesn't cover. And we call it the retirement smile. And the smile is at the beginning of your life, your retirement life, your expenses are kind of high because you're in the go-go years of your life. And then it slows down, but then expenses go up again at the end of the other end of the smile is because the medical expenses are going up if you live long enough. So planning for those healthcare expenses is really a big deal. Then what if you're taking out along the way, if you don't have a plan and you don't know what you're doing, excess withdrawals. You're taking out too much money and whoopsie, we're going to be out of money within 2 years. Yikes, bad time to find out. Mm-hmm. And then we talked about the unexpected loss of a spouse and or illness of a spouse. And what about extended care? I call extended care or long-term care the estate extinction event. It will, even for sizable a lot of times, let's say $1 million. I mean, if you get a long-term care and you need skilled labor to take care of you, nursing care, that could be $1 million over 3 to 4 years. Wow. That's a lot of money. And for the average estate, they can't take that punch in the gut and still have anything left over for heirs. So planning ahead of time and making sure you're ready for these gotchas in this planning phase is a key factor. And the last one, it's not really one of those risks. I mean, the typical ones, but here we are, and we're in a day and age where I don't know what the statistics are. Something like somebody's identity is stolen every 3 seconds. Your financial identity, your risk to theft is growing and growing and growing. And with our clients, we're seeing some clients that it may not be them, but it's their older parents that have been suckered and they've been scammed. And all of a sudden, the kids, they're hustling to try to head off theft. So after the plan is done, in terms of the second phase here, we will stress test it, mathematically test it against all these risks, and we'll have a probability for success. Not everybody's probability is high as any other. Some people are in good shape, some are not. But you'll know what the situation is, and we can adjust things at the end of that so that the gift number 2, if the first one is clarity, the second one is confidence that they have a good plan. And we've addressed all the things that we need to address in a solid plan that has a high probability for success. Mm. The last one in the stage is the deployment stage. And we actively follow up with our clients with frequency. And many of our investments have measures of protection. They've got active management in it. So we're adjusting to the markets as things change. And we're talking to folks, and we know that life is dynamic, that your situation may change as you move along in life. And so we're able to adjust. And that last gift there, if the second one was confidence, the third one is comfort, that I know I have a good plan and that we're readdressing things as we need to along the process here. So if we did our job, wrapping it up here, if we did our job in our proprietary Momentum LifeYield process, ideally, not always, but ideally, if we follow this, you'll pay fewer taxes, you'll have enough income for the rest of your lives, and you'll have greater wealth growth if we can implement all the steps in this in its ultimate outcome.
Well, I love that. It's almost like you've done this before. Just came so clearly, and I love the clarity. I love how that's one of the things you provide to your clients. And I can just tell that you put one foot in front of the other, and it's like, okay, well, now let's talk about this, and why is this important? And this leads us to the next, which is, and then I'm almost envisioning the camera like panning to like the drone, you're pulling back all the way to the 30,000 foot view, and you show the client, it's like, okay, now, how does this set with you? And they're like, yes. Now, is it going to be 110%? No, because things happen, but you've got the contingency plan in place, and you're like, okay, hey, just FYI, last quarter, this came up because the market did this and this. We just tweaked this and we're still on track. But having the plan up front is just so key. I love how you laid that out, Merrit.
Yeah. Again, the process, and thank you for that. Again, process, a lot of times in the financial industry, we say that we are our process because, again, it is about increasing the odds of probability of success.
Yeah.
And if we have a process that we've tried, we've tested and we've tried and we've refined it along the way, then we know it's a solid process. And there's a few things I didn't cover in here because, again, it's a proprietary process. But if you're going to have predictability, if you're going to have repeatable success, you need to have a process. And the average do-it-yourselfer who thinks they're walking this path, their own path, and how are they supposed to know everything that's going on in the financial industry, all the vehicles and all the techniques now is getting more and more sophisticated.
Yep.
They just can't.
They can't.
Yeah. And if they forgot about inflation or they forgot about taxes or they don't know how to minimize their taxes, they're just not going to hold up.
It reminds me of dominoes. You might think that you had all those bases covered because you downloaded something on the internet, but all of a sudden you forgot to factor in this one thing. And then all of a sudden the dominoes fall. So yeah, really great point. We
call that the gotchas in life. And even if you do all your plans, there could be some gotchas that pop up there, and if we did our job solidly, we've got flexibility in our plan that we can adjust.
Well, Merrit, I really appreciated the insights and the wisdom that you brought here. What would you say if someone is going, hey, I might want to learn about this proprietary Momentum LifeYield process and how it could apply to me? What's the best way someone could reach out and connect with you? Really easy. You can email us direct. You can email it to me, Merrit at Momentum FS Group. That's franksamgroup.com. Go to our website, momentumfsgroup.com. Or you could I have a fairly unique name. You could just type in Merrit, Merrit, Strunk, and you're going to get me. There aren't a whole lot of Merrit Strunks running around. So I have that benefit of being fairly unique. And you'll find our website, go to our contact page, fill it out, and then we can talk about getting your own discovery session where we start looking at clarity being the first gift that we deliver to you. And you'll have some aha moments in there. Awesome. Well, Merrit, thank you so much for coming back on. It's been a real pleasure talking with you today. Mike, it's always enjoyable. Thank you again for having me. I look forward to the next time.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.